studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody. Welcome back to another live stream. Thank you for being here with us on another important day. And today is the most important day, I would say, of the week. We have massive, massive news throughout the entire day. And together, we are going to try and push through. I think today we are expected to probably break some records for the A1 Trading live streams. We're going to go here and we're going to watch PPI numbers, but we will be back later today for the FOMC rate decision, the June meeting, but then, of course, also the follow-up commentary from the Fed, the meeting there, which will absolutely cause markets to be on watch for what's to come next from the Fed. I've got my coffee. I hope you've got something to drink as well, whether it's water, coffee, soda. Don't trade with liquor. Trust me, bad times there. I'm just kidding. I've never done that, but I don't plan to. And I don't think it's a wise decision. Let's talk about what's going on here today, why we're gathered here for this lovely event, and why we're streaming here a little bit earlier. We've got 300 people here. Do me a quick favor, guys. If you are a supporter of my content, if you support the live stream shows that we do here throughout the week, they're a lot of work, but we love doing them. If you support what we're trying to do here, do me a quick favor and hit that thumbs up button on the stream down below as we get started. Okay, so the first up on today's list, all of this stuff, by the way, set to move the dollar substantially, set to move equities, indices, commodities like gold and silver, oil, all of them set to move big today. And let's talk about it. So I think the first thing we should be paying attention to is, of course, what we're here for today. Core PPI and PPI numbers coming out of the US. This is a measurement of inflation that is very, very important to markets and to to the economy. PPI tracks the producer price index, whereas, of course, we're very all familiar with CPI, which is consumer price index. PPI is producer price index. It's up the supply chain, what producers are, whether or not their prices are rising or falling in that area of the economy. Now, it's a really, really important leading indicator in some ways to what CPI could be down the line. So PPI is a very crucial piece of information, hence why we have the red folder. This number comes out in 8 minutes and is likely to cause some volatility on the US dollar. Let's talk trade management here before we get into charts. If you are here and you are watching the dollar and you're saying, I have dollar exposed positions, gold, indices, dollar currency pairs, be very careful here this morning. The reason I say be very careful is because there is the possibility of large swings in dollar. Now, I want to talk about the dollar and where we are at pre-news, okay? Nick, why don't you trade stocks? Just not my thing. I don't like to, I invest in stocks. I hold a stock portfolio, but most of my active trading when it comes to stocks is through the indices, NASDAQ, S&P, Dow. I trade those things night and day. They're my favorite thing to trade. I just don't trade individual stocks nearly as much. DXY, bearish, just looks so bad right now. Look at this. We saw exactly what we talked about in yesterday's video on this channel, on my channel, Trader Nick. If you're watching on A1 Trading channel, it's on the Trader Nick channel. I talked about how dollar weakness came in off of yesterday's cooling CPI numbers. And sure enough, price retraced exactly to the level of resistance that we talked about and found sellers. Today, dollar looks very bearish, but this could snap back the other way, right? We don't know what the news is going to be. I'm not a fortune teller. We're not here to gamble. If you're here to gamble, you're in the wrong channel, my friends. We're no Lambos, no casino vibes, straight trading, real trading here on this channel only. So when you're looking at this, I'm not going to gamble what I think the news is going to do. Absolutely not going to do that. Now, of course, I might hold swing trades through a news event, but that's not the same as right now. I'm not loading up in dollar buys or dollar sells. I think that is a very foolish thing to do because nobody knows what the market's going to do. And how many times have you seen people blow up their accounts on news, or perhaps even blown your own accounts trading news? It's a really, really, really bad idea, in my opinion. So news comes out in 6 minutes. For people asking when is the news, we have 6 minutes to go. And, here's the thing. Dollar looks very weak so long as we stay below 103.4, in my personal opinion. Any retests today that may occur on this news or surrounding this news are, in my opinion, selling opportunities until proven otherwise. Now, today you have to be very careful. PPI is something that will move the markets, but with the fact that we have the Fed meeting shortly after today, a couple hours after this stream, we will be back for another live stream for Fed meeting. Markets are going to probably take a look at this PPI number, and markets may move, but they may also give back some of those gains in anticipation for the Fed meeting. So let's talk gold as well. So again, I mentioned dollar is bearish in my opinion, unless we break 103.4. Everything underneath this area, retests, intraday, throughout, anything like that, sell heavy in my personal opinion. Now, of course, this is not financial advice, and please do not take it as that. I'm a trader. I don't claim to be a mentor. I don't claim to be you guys' mentor or you guys be my students. Nothing like that. I'm a trader. I trade. I share my experience. I share my logic, my thought process on this YouTube channel, and I can be wrong. So please do not take what I'm saying as any sort of financial advice. Please trade very carefully in a news event. You guys would not imagine how many emails, how many YouTube comments, how many messages on our website we get from people who are like, I blew my account trading news. We don't advocate for trading the news release. We think that's very foolish. It's a quick way to make a lot of mistakes. Anyways, so let's see. Gold here found support yet again at 1940. 1940 and 1970. This market is ping-ponging perfectly between these two levels. I'm watching for breakouts, whether it be to the downside or to the upside. As we go into this event, I think that if we break back above the highs, very likely this range-bound market is still intact and we head back to 1970, in my opinion. If we break underneath the lows, retest sells and new lows are to be expected, in my opinion. Guys, we've got 3 minutes to go. We will be watching a lot of things today. And I just want to say real quick, check. First of all, hit the thumbs up button on the stream. But number two, this afternoon, we have a really, really big stream, like way bigger than this one even. We've got 600 people. It's getting bigger this afternoon for the Fed meeting. I want you guys to come back and join us. Here's what you could do real quick. Hit the thumbs up button, but also subscribe and hit the notification bell so that when we go live later on, a notification will pop up on your phone so that you can join in on the action. So just hit the bell button next to the subscribe button on whether you're watching the A1 Trading YouTube channel or the Trader Nick channel, either one. We're streaming to both right now. So again, for gold, I'm looking for breaks. I'm looking for breakouts. Either way, we'll see. Guys, we've got just about 2 minutes to go here. Real quick, let me also remind you guys that if you are not already in our Discord, today is the day to be in the Discord channel. We are trading throughout the day. I mentioned it's going to be a very busy day. I'm currently still in S&P longs. We're going to be trading throughout the day. Position trades, options trades, swing trades, stock trades. We've got everything going on between myself and Frank. Today is the absolute best day to join. And if you are not already in here, we are doing 50% off. That is correct. 50% off. We've never done that before for memberships, and you can get half off right now. Click the link in the chat right now. We're dropping it. If you guys want to join us today, if you click this link, you're going to be connected to one of our support reps. Click this link and you can get 50% off. And if you message us right now while we're live streaming, you can get 55% off if you connect with somebody. You have to connect with a person on our team. They'll walk you through the membership. They'll tell you information about it. Take a look. Get 50% off the Discord using this link right now only. Click this link, message us. So it opens up, click 50% off VIP signals. This will include the chat room, the educational coaching webinars, the education section, as well as the trade alerts with full breakdowns on every trade. If you're not already in there, I'll talk about that in a second. Again, we want people to join us today. It is the day to join in the action. We will be very busy today, tomorrow, and Friday. So come join us. Guys, we've got just over 1 minute. I'm sorry, just under 1 minute. Let's get set up on our charts so we can watch PPI here and see if there's a reaction to the charts. I'm sorry, a reaction to the number. We've got gold top left, guys. We're going to put gold in the top left. Top right, we'll put the S&P 500. I do have a long trade on S&P with a trailing stop on this. So I am in profit on this trade and looking to see if I either get stopped out for a profit, which I wouldn't mind, or if I'm going to hold on. We got dollar bottom left, guys. And in the bottom right, we're going to put the euro, okay? We've got 15 seconds to go for our breaking news. Check it out. All right, we are T minus 6 seconds to see what PPI brings us here in terms of volatility this morning. Let's see what we get. All right, and gold finding its bearings, dollar down, dollar continuation, 102.55 printing here, S&P shooting up, euro finding some strength, gold retesting 1950 currently, 1951.5. I feel like I'm an auctioneer. Somebody commented that yesterday. Do I hear from 1952? Do I hear 1952? Right? I could pass. S&P 500 really staying strong here. I'm loving to see this. I'm still in my trade. I'll show you guys my brokerage statement or my brokerage account where I am long S&P. I'll log in really quick. So we are currently floating over 2,000 on this trade. This one is going rock solid. This trade is just killing it. We took this inside of the group, and I don't actually have a take profit. I'm just using this to track the trade. But this trade is just going crazy. Look at this. At this point, we are several R in profit. Trailing stop has been locked, and I'm looking to do more of that today here. What a move. Gold popping up, dollar bearish. We got to go check the numbers. Let's see what we got in terms of PPI here this morning. Let's go quickly to take a look at that here today. So Forex Factory PPI numbers came in minus 0.3% month over month, and core PPI month over month remained as expected, actually grew by 0.2%. But this is a much lower than expected number by 0.2% lower. We're expecting minus 0.1%. We got minus 0.3%, showing some slowing in producer prices. This is big deal for the dollar, very bearish, I would say, and adds to the case against the dollar right now. Gold finding its bearings, but still stuck at 1950. We'll see if it's able to break out here. And again, I am long S&P 500. That is my primary trade at this moment. I'll go back to my S&P long position. Again, this is a trade alert that was shared Friday, but we just haven't even had a chance. I've been trailing this trade aggressively, and it just does not want to pull back. You can see all the updates that I've been making on this. This was my initial entry. Price pulled back. I called this trade alert out inside of the group, and we have just since been trailing this stop loss. You can see there it's trailed further, and then we trailed it again after it broke clean through the highs, and then we trailed it even further after yesterday's CPI number, followed by today's PPI number. Continues to push the S&P into profit. This is a crazy trading week for us. It's been an abnormally good trading week. I should clarify. Not every trading week looks like this for me. This is a very, very good trading week. As we continue to hold this S&P long bias, this dollar bearishness is working out beautifully right now. This trade floating $2,050. What are you guys trading? Comment in the chat real quick. What are you guys trading here this morning? How did PPI go for you? Comment it as we get going here. And while you do that, again, we are now on the other side of the news. PPI numbers came out. They were lower than expected. This shows dollar weakness. This shows potential slowdown in prices. Matches beautifully with the CPI number that we got yesterday. This is a great report in terms of what the Fed wants to see. And I think that almost certainly we see a rate pause going into this afternoon's meeting. There's not a lot of surprises there, but what is potentially up for debate, up for surprise, is the July meeting, which we are going to get some insight on during the meeting today. And today with this number, we add more confluence that the dollar looks weak, that the indices look strong, that gold is still disappointing everyone because it's not going either direction. But again, fortunately, we've been catching that indices trade big time, which has been a big mover for the accounts. Yeah, PPI numbers were volatile here this morning. And guys, again, remember, we are doing our 50% off membership sale. We are going to be trailing stops on this trade here before news here this morning. I'm sorry, Fed meeting this afternoon. If you guys are not already inside of the Discord, join into the action. Click the link that's being dropped in the chat right now. This is going to connect you with somebody. And like I said earlier, this is our biggest membership discount that we have ever done. We're doing 50% off. But if you're here with me live on the show, it's a secret extra discount for people who are live stream viewers. We really appreciate you guys supporting the show. We are doing 55% off if you message into the support center on the website. So click the link that's just been dropped. This link will connect you to a support representative at A1 Trading. Just ask them for the 55% off discount, and someone from my team will get you set up with any membership you want. You try us out for just a month for 55% off. It's well worth it. And you can join in on the Discord. Again, if you're not in the Discord, you get all the trade alerts, positions, options trades, stock trades. We have a chat room available. We do coaching webinars. We have a guide on how to get funded. We do have our strategy library. If you're serious about this stuff, I'm telling you, invest at least in a 1-month membership, soak up some value. And if you don't like it, you don't have to stick around, but most people do. Most people stick around with us and they enjoy the group for what it is. We have a lot of great traders from around the world there. So yeah, I mean, here's the thing, right? Gold is staying strong here. And the question will be for gold bulls here today, can we break and close above this 1952 mark, right? We've had some resistance come in here. We saw the pullback, but we found buyers. PPI numbers did not disappoint for gold. We see this rallying. But yesterday, remember, we had positive CPI, good news in terms of CPI, and we were not able to actually stay strong. So today, we'll see if this PPI number does it for gold. This is what I'm looking for. We start to see sort of stair stepping again for gold. That might be something of interest, but we'll keep tabs on that going forward. If you don't mind, Chandler, on the producer side, what time do we have Alex joining us on the live stream? Is it set for 8:30 or no sound? Can you guys hear me? Somebody said no sound. Let me know. Okay, about 10 minutes. Cool. Thank you. Perfect. That gives us some time to go through some charts. Let's talk euro dollar here today. Shooting up big time. Big move. There's sound. Okay, cool. Thank you for that. The producers always have our back, guys. The stream would not be made possible without the awesome producers behind the scenes who get in early for these shows. If you guys are big fans of the show, do me a quick favor, type thanks producers or thanks James and Chandler. If you know them by name, a lot of you guys do. Big shout out to them as always for making the show possible. So euro, look at this. I mean, this is a 4-hour chart. This is a beautiful bullish move. I mean, you can't get much more of a textbook bullish move going on for the euro right now. And we've got to talk about a few things with this move, right? The euro against the dollar. The euro is kind of winning right now with all this cooling inflation news coming out for the US dollar. The US dollar has lost its touch, I think, for now. Of course, we'll have to see. We have Fed meeting later, so it's too soon to really speak solidly on it. But this PPI number followed before I'm following the CPI number that we got yesterday, in my opinion, confirms the dollar bearish thesis that I've had. Again, price pulling back. Found support here this morning and now breaking clean through the highs. Where's the next trade for this? Well, I think personally, there's nothing here up in these prices, but pullbacks after a breakout, maybe the euro just continues to push higher. Let's take a look at the pound as well. Pound USD looking very bullish as well. Oh my goodness, guys, this is just a strong chart. You can see this makes a lot of sense to me. And I want to show you guys something real quick in terms of central bank forecast stuff. That's what it's all about today. You have many traders out there trading purely technical charts. You may not need to know all the fundamentals, but let me give you the highlights right now. The US dollar is so weak because all of this cooling inflation stuff is contributing to forecasts for inflation to continue to decline, which will follow, what will follow will ideally be, if we stay on the course, rates coming down. All you need to know in terms of the simple fundamentals of interest rates, generally speaking, higher interest rates mean stronger currency, but not necessarily where they are today. It's all about the future. The market is all about the future projections. This is why people are so confused by news, especially if they haven't taken the time to learn, the economics behind markets. They're like, oh, news makes no sense. Something comes out and it goes the other way. Usually it makes a lot of sense. It's just that you don't understand the economics. You don't understand the fundamentals. Markets don't pay attention to today's news. They pay attention to forecasts for news in the future, right? So when we talk about interest rates and projections for them to come down, that is why the Fed meeting this afternoon will be so important to market participants. It's all about the future for markets. Markets do not care about By the time news comes out, most people have sort of anticipated what's going to happen. If you're talking fundamentals, markets are looking forward. So let's look forward together. Inflation numbers are expected to continue coming down, but let's compare it to some other counterparts. Let's talk UK. UK is expected to hold their interest rates for much longer at higher levels, and inflation is expected to come down, but they have a lot further to go. They're just getting under control the 10% handle for inflation, but they still have a lot further than the US to go. So let's remember the key thing we talked about. Higher interest rates mean more bullish for the currency as they're making stuff more expensive and the value of their currency inevitably is going to go up. Well, look at the dollar. Things are already expected to cool off. We're much further in the curve on dealing with inflation. And so when we look at pound USD, I'm bullish. And so is the market. Again, professional traders, they understand the fundamentals. They trade the fundamentals. They use them in their trading. I'm not, here's the thing. There was, I've had many conversations with hedge fund managers. When I was doing the podcast series, I had 2 or 3 professional money managers on my show. And during those periods, all of them said, yeah, technicals are important, but fundamentals are very important. Technicals help you with entries and exits and managing position sizing and that sort of thing. But fundamentals are what give you direction. At least that's how I trade. And that's how many, very professional traders that I've worked with and spoken with, that's what they do. They use the fundamentals to help guide the direction. Right now, the direction has been dollar bearish thesis, pound strength, right? UK has really high inflation. They're expected to keep their rates higher for longer compared to the US. And hence why we are generally bullish right now on the pound against the dollar specifically. So where do we go with that? Well, then we take the technical side and we say, okay, bullish pushing here on the technical side. Fundamentals do match up. You have some areas of value on this chart, but again, I'm not going to look to chase. So I'm still going to look for pullbacks. I'm going to look for opportunities to possibly pick up the pound against the dollar, but it's got to give me a chance to do so at a reasonable price. So possibly pullbacks here, possibly pullbacks here. We could look for attempts to get long. Now, the other thing though is that, you might ask, well, what about the euro? You talked about the euro. The euro, look at this. Euro maybe even makes more sense to me. Interest rates are expected to stay high for a lot longer, and there's not even forecast right now on our data to see any sort of rate cuts in the future. Inflation is expected to come down, but again, comparing this to the US, where inflation and interest rates are expected to come down, we have a different story here. So when we look at the euro, I'm generally bullish on the euro against the dollar. And this chart matches beautifully to that thesis. So again, I mentioned breakouts, retests, continuations. And in just a moment, we'll hear from Frank for just a few moments. Maybe we'll go through some COT data. I want to ask him some stuff on some of the currencies specific to COT data just after we hear from one of our sponsors. Check this out.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partner broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back, and welcome back to the show, Frank. Thanks for being here.
Hey, how's it going?
Good, Frank. We had PPI numbers come out this morning. Another number matching the theme of cooling inflation. Yesterday, we had CPI come out at 4.1 compared to 4.2. Or am I getting that wrong? Was it 4% year over year CPI yesterday?
Yeah, I think month over month came in the same for core at 0.2, and then we saw minus 0.3 on the overall PPI month to month.
So that's for PPI. Overall. And yesterday we had I think yesterday we had inflation core CPI.
Yesterday's CPI came in. Mm-hmm.
Yep. So it came in at 4%. Okay, cool. So real quick, I wanted to ask you, Frank. We've got another guest who is going to be joining us in just a few minutes. But this window should give us some time to take a look at the COT data. And I want to ask you about currencies. We've been doing a lot of indices and commodities. I want to hear your thoughts as we look at today's Fed meeting upcoming. Where are we at with currencies? Talking US dollar, pound. I mentioned I was highlighting your central bank forecast tab, which, by the way, guys, if you liked that data, that's courtesy of Frank. Frank is the brilliant mind behind this. Him and Giles did a great job on this. But Frank, walk us through just for a moment. Give us the shotgun of rundown on COT data for the currencies. Where are we at?
Okay, so we got the ECB, BOJ, and Fed today. From COT, it looks like they're kind of betting on more of a dovish stance for the yen. Looks also, although it's majority long on the euro, it looks like they were shifting some kind of sentiment. I don't know if they're like expecting a pause or a hike, really, according to COT, but forecasts say that they're going to hike again. And I think overall, if I were to like, I guess, rank them in some way, I would say US is going to be dovish. JPY is probably going to be just as dovish, and Euro is probably the only hawkish thing we'll see this week.
Yeah, and good points there. And then also to your point there, Frank, it's very interesting. We talked fundamentals for a moment in terms of central banks. We've got the COT report data pulled up, and you can see it matches very, very similarly a lot of what you're saying. The pound, the euro, both relatively hawkish central banks, are very on the scale. They're very heavyweight in terms of what institutional traders are buying, according to the COT data. And we flip it around. We take a look at Japan. We look at Canada, which I guess Canada doesn't quite match, but Japan for sure, and New Zealand shifting to the more bearish side, more on the dovish side of things. So it's an interesting dynamic there we're seeing in terms of the euro most hawkish, Japan most dovish, and certainly institutional money seems to be flowing in those directions as well. So yeah, I guess Frank, last question for you before we bring in Alex here as our next guest. Any preference for currencies going into this week? Do you have a favorite? Do you have a least favorite? Are you still bearish on the yen?
Right. So outside of gold, yes, I'm in one other thing. I'm in Swiss yen. I took that long trade yesterday. Just overall, I was trying to get into short yen trades, but they were also high. And then on this pullback we saw a couple days ago, just looked like a good entry point. So on a technical level, I just got in on a demand zone. It did break under a trend line, but I still entered on a demand zone, and it ended up coming back up to where we wanted it to go. So just trailing that for now. Just short yen overall. I've been short yen for a while, and COT's backing me up on that. And yeah, that and gold.
Yep. Very awesome. Well, Frank, we're going to bring in Alex here. Thank you for your take as always. We got our brief intermission with Frank, and we'll catch you back on the next stream. We'll be back later for Fed meeting. So thanks for coming on, Frank. All right, and now we're going to bring in Mr. Alex. We'll say hello to him. Alex, we could bring him in. Hey, Alex, how are you? Can you hear me? Oh. Maybe not. He was there for a second. We'll probably have him back in just a moment. Sorry about that. Technical, it's kind of like when you're doing like live or like Zoom calls. Sometimes it takes people time to figure out their mics and that sort of thing. But we'll probably have Alex back in just a moment. In the meantime, let's talk about what's been happening post PPI. People are mentioning gold. Gold shot up. It's given back some profits now. But I mentioned this earlier. I think gold has room to sort of fill out this range that we're in. So we're looking at let's look at the 4-hour chart. 4-hour chart again has been stuck between this level of resistance, this level of support. And with this pop here today with cool PPI numbers, I think this has room to kind of expand back to the previous high around 1970. So we're going to watch this one closely. Again, you can't be overly optimistic with this stuff right now because, guys, what is happening in this market right now is still happening right in front of a big Fed meeting that we had this afternoon. So Fed meeting could reverse some things. It could also encourage things to go higher. Here in a second, we're going to bring in Alex. I think he's got his mic and camera. Alex, can you give me a thumbs up if you're good to go, if you can hear me and everything? All right, we'll bring him in. All right, Alex, we'll say hello to him. Hey, Alex, how are you?
Hello, everybody. Thank you. I'm doing well. Hopefully, you should hear me. I hear you. I see you. So
Good. Yes, Alex, I can see you. I can hear you. And you've
Perfect.
got the awesome setup behind you. So it's good to have you on the show. And Alex, this is actually not our first time doing a show together. Many people may first time be introduced to you here today. But we did some commentary together. I think you were hopping hotels with the last time we talked. How's life?
Yeah, thank you. Everything's fine. Yeah, the last time we spoke, I was actually in between moving in Dubai. That's right. At the moment, I'm in Cyprus, actually. So I'm on the other side of the world. And so everything's great, actually. Markets have been, obviously, there's always ups and downs. There's always all sorts of challenges and new things to conquer. But who am I telling that, right?
Well, yes, Alex, it's like I said, it's good to have you back on the show, and I'm glad to hear that you made the move. You're in Cyprus now. That's awesome. So, Alex, this market right now is so crazy. PPI numbers came out cool. CPI numbers came out cool ahead of a big Fed meeting today. Walk us through. Give us the bird's eye view of how you're viewing the markets here right now. What are you trading? What are you looking at? I guess just what's your general take on everything that's been going on?
Right. Actually, it's a very interesting question. Right, very now from FX, I'm holding back until I see what the Fed is actually doing. Why? Because what we're seeing is obviously the dollar index rolled over a little bit. Something that I really pay attention to is something like the dollar index, or even when trading crypto, I look at the USDT dominance because they give me information about the overall shape of the rest of the market, right? They give me like a bird's eye view for a quick, let's just say trading setups become more difficult or easier when you trade in line with these indices, right? When USDT dominance is going up, then typically it means within the crypto sector, a lot of money is flowing out of the non-stables into the stable. And that actually means it's a rather bearish environment. Same for the dollar index. When the dollar index is rolling over, typically it means that more money is going into the risk markets, right? Whether it's the S&P500 or the Nasdaq. But if you ask me, those are, it's crazy. They're overextended, like you can't even find words for that. So yeah, the numbers came in cooler, and I think what people really don't pay attention to too much is, as always, the devil is in the details. And if we look at yesterday's CPI number, it looks cooler on the headline, but it's not really cooler when you look into the components. So in fact, like the sticky inflation remained very much sticky. So we still have a lot of very relevant parts of the inflation stuck at around 5%. And don't forget, that's 5% higher than last year's inflation, where the whole war was really flaring up. So that's pretty high still. What brought the whole CPI number down is energy. And mostly energy. And energy is a wild card because energy can be extremely volatile. The Saudis obviously are trying to, it's a cartel control type of market. And if they go all crazy because, I don't know, Biden stood up with the wrong foot and kicked their asses even more, then that could influence markets a lot. One of the things, and I actually wrote an article about that the other day, why commodities continue to be rather beaten down despite this environment. First of all, I don't think that China is recovering in the shape that a lot of people expected or hoped for. And a lot of the narrative about the stock markets going back up had to do with that. So that's one of the things that is really facing a dead end at some point, sooner than later, in my opinion. And the cost of commodities is very high because the interest rates are high. So it's really interesting that when the Fed increases interest rates, it actually makes dealing with commodities more expensive, and that's why their prices are lower, because it reduces the actual demand for it. But nonetheless, if you consider all these things, they actually advocate a weaker economy, which would translate into a cheaper market, which we're not seeing. So another thing that we're seeing is that a lot of them, and I trade a lot of options, for example, too. Like one of my favorite strategies is actually selling premium on the options market. So which is more a quantitative type of strategy. It's not really trading directionally. But the options market, or the liquidity in the options market, drives the market direction in a way that we've never seen before. The impact of that, of the market makers needing to hedge themselves, is just enormous. When so many people are just trading the long side of the options market, short term, that forces market makers, because look, what does a market maker do? A market maker is supposed to provide liquidity so that there can be transactions on the market, right? So the market is functioning. So when a lot of people buy and a lot of people sell, then the market maker only needs to hedge the difference between of that. That's basically managing the risk. However, if there's only buyers, no sellers, what is the market maker going to do? He's going to buy the underlying. Let's drive the underlying up. But these, don't get it twisted, because these are still short-term moves. These are still very much zero DTE, same-day type of options. And when the moment comes, when the music stops, as they say, musical chairs, right? The economy gets worse. People have less gambling money to play with, and all of these things happen. At the same time, then there will be no support buyers, and then the lower end can be really forceful. So right now, I prefer, let's just say, hedged quantitative type of strategies over directional strategies, because that directionally trading environment is skewed. So I guess it's a very diplomatic word to use in this instance. And until we have a more clearer picture about that, I prefer to not get too exposed. And in the meantime, like I said, I look at the dollar index and look for interesting setups in correlation with that.
Yeah, no, and Alex, you make some great points there. I also too am on the the options writing, options selling side of things. I enjoy, my favorite thing to do it on is kind of boring, but I like to do it on silver. I like to do it on some of the oil ETFs, that sort of thing, as well as bond ETFs. Very boring. I don't do it very much on individual stocks, but to your point there, it's been a tough market, right? I mean, if you're looking at the S&P 500, obviously, if you're in on this, which to be transparent, I have been riding some longs, which has been awesome. It's been hard to, I can imagine, be very, very difficult to try and be a buyer of this on dip buys, because there's been barely any dips, right? You see these very, very brief things before it shoots back up. And to your point, a little bit of caution is probably warranted, considering, look at this dollar here today. It has just absolutely fallen down. And to your point, devil in the details, dollar bearishness, while I do think that there is some justification there, we have to be cautious that we don't get overly bearish on the dollar, thinking that the Fed is just certainly going to pause from here. It is looking like we have some victories for the Fed. There is no doubt there. I would say that there has been some progress there in the inflation number, beating yesterday, PPI coming out better than expected, or cooler than expected. Here this morning, there's definitely some I would say catalyst for dollar bearishness. But remember, guys, the Fed sometimes does not do exactly what the market expects. It has been doing that. It has been pretty much on target the last year or so, generally doing what people expect, but not 100% of the time. So we have to be careful that, again, it's a crowded trade right now, being short the dollar, being long indices, and you have to be very careful when you get very crowded trades, especially you mentioned options positioning is reaching some extremes. It'll be interesting to see how that plays out. So actually,
if I just may get another very interesting thing that especially FX traders, in my opinion, should look at is sentiment. You could grab those from my FX book, from FXCM, from a number of brokerages, or there's tools that have this consolidated. But because when you said crowded trade, it rang in my ear. When everybody's sitting on one side of the boat, it's really you should consider if that is the side you want to continue to be on, or because at some point everybody's rushing through the same door at the same time, and this is when the problems happen.
Right. No, and I think that's an amazing point as well too. Is what we generally find is, and Alex, I'm sure you've seen this before. Right now, what's actually very curious is that I don't necessarily either think that buying the dollar at this point, personally, I would find that to be a very tough trade, because if we do look at sentiment, what's interesting is that on the dollar, like you mentioned, you can grab this data from a variety of places. We pull it from a couple different brokerages and sort of aggregate it. But right now, the dollar trade is very, very crowded on the long side by retail traders. I'm sorry. So
Wow.
client positioning, and this is something that we generally see. It's a weird concept, but usually when something like this starts falling off the cliff, we see client positioning start to polarize, where they start trying to buy this. And yes, there may be some room to the upside, but what very often we see happening is a day like today, where this is just this ginormous run against retail traders who are very long. They've been long for a while, and it's an interesting thing to see that kind of playing out here today. Is there upside for the dollar? Possibly, but again, I think you got to wait to see some sort of bounce, some sort of reversal of that retail bias. Again, just to add one more thing before you pick it up, pound USD, Aussie USD, it does seem like retail traders are betting against that pound strength and buying the dollar, and betting against the Australian strength and buying the dollar. So it's an interesting sort of polarizing direction right now on the dollar from retail traders. What do you think, Alex?
Yeah.
What's your take on all that?
I think, first of all, the dot plot, it's all in the dot plot today. Why? Because everybody expects the Fed to pause, so I don't think they're going to come up with a big or to skip, I guess is the word. I don't think that they're going to go against that. However, the Fed is between a rock and a hard place from the perspective that if they communicate too weak behavior now, they're actually getting exactly that happening in a market that they need to work against, right? Everything's already very hot, and it's getting overheating even more. And and again, don't forget that the components of the inflation that are really important for the Fed, they look more at PCE and core inflation kind of thing, they remain quite like they're not moving, they're not going down. What's going down are other elements, and even things like shelter or transportation went up. Okay, those are things that directly influences people's quality of life. So that's why I would be cautious to assume the Fed is going to strike a dovish tone today. And if that happens, the dollar weakness that's selling into the meeting can flip-flop very quickly. And that's personally what I expect. But okay, look, it's very difficult to, if we knew exactly what was going to happen, we'd be billionaires, right? So these are probabilities that we will look at, but that's sort of the thing. I would wait for that to happen and then get back into the action. Also about the positioning, the retail positioning, one thing that we need to consider as well is that a lot of the brokers, they internalize the flow. So that means that this exposure is not actually on the market. It's in the broker's books. As long as these books are in plus, they're not going to need to hedge. They internalize the losses of the people, right? But if the market changes, then the broker needs to hedge. And when the it's similar to the options. And when the FX brokers need to hedge, they're sending the opposite side's positioning. And then boom, it actually adds to the pressure to the other side. So that whipsaw or that turnaround can be very violent because of that. And that's, I think, is one of the components or one of the points of views that a lot of retail traders miss just yet, to understand that most of the market is liquidity, is hedging. It's really not us speculating.
Right. No, that's very, very true. I mean, just look at, for example, there's so much money that gets moved around just on the hedging side of things. If you ever look at the commercial side of the commitment of traders, it's massive, right? You have a lot of money that moves around in the currency world. Many people get the wrong impression about, they hear, the currency market, for example, does trillions and trillions every day. Well, you have to remember, if McDonald's does business in Europe, they need euros. That's not speculation. That's
such a stupid metric. I'm sorry again to interrupt you, but I hate this metric so much. It's as old as the FX market. This stupid, $1 trillion a day. Yes, the only thing that it communicates is that there's liquidity. Yes. Meaning but again, that liquidity, you're not really tapping into it. Your broker is internalizing your flow at a 9 out of 10 chances it is, So, but anyway, I don't want to sound too negative about that. It's a different conversation for a different day.
No, but it's good information. And Alex, I just want to say thank you for coming on the show. We've got a really busy day ahead of us with Fed meeting. Before you go, last thing I'll ask you is you mentioned looking at or waiting for the Fed. What would you be most interested? Would you be mostly interested on the options premium side following the Fed meeting? Would you be mostly looking at indices, commodities?
Yeah.
What's got your eye after the Fed meeting? Wherever
Yeah.
you'd like to go with that.
So on the options premium side, I trade like a quantitative strategy, which means I'm in the market all the time. I'm obviously if there's a statistical advantage on premium or on volatility, it's a lot more mean reverting than a standard market, right? And that's really what we're taking advantage of. So on that side, I really just care for some volatility and mean reversion. That's my friend there. And that actually, if that happens with now, what's happening now going back, which there's a fair chance that could be a good trade, but I'm already in that. I would really be interested in shorting these overbought indices personally, but it's a hot trade. It's a hot trade though.
I was going to say we'll have to have you back for that one, Alex, because I'd be very curious to see where you go with it following today's Fed meeting, and certainly it's been great having you on the show, Alex.
Thank you for having me.
Where can people find you? What's the best way? Do you know YouTube? What's the best way for people to find you?
Sure. So basically, my Instagram profile is AlexDou, ALEXDOU. So that's my handle. I publish like all sorts of like stories and like quick information about the market, and you'll find like links to my other channels over there as well. I'm from Germany, so don't be confused if I sometimes post also German stuff, but mainly this is my English channel.
That's awesome. Well, Alex, pleasure having you on. It's great to hear from you again.
Thank you, Nick.
I'm glad you're
My
moving
pleasure.
to Cyprus. We'll drop some handles for people.
Actually, I'm between both places, so I'm trying to get the best of both worlds.
That's awesome. Well,
thanks again, Nick.
Back soon, Alex.
I look forward to seeing you soon. Thanks. Bye-bye. All the best for trading tonight. Bye-bye.
Yeah, you too. Yep. Wow, guys, great to have Alex on. You guys, we had him back. I think it was 2021 or 2020. We had him on the show. Fantastic guy. Super great energy. Very knowledgeable about this stuff, and always good to have new guests on. And hey, if you guys could do me a quick favor, go follow him on Instagram. And can you guys do me a quick favor? Help out the show. Let Alex know, go DM him on Instagram and just let him know you want to see him come back on the AWIN Trading Show, because I really enjoy his presence. It's really nice to have somebody who's very rooted in the fundamentals, who's even talking about options premium, which is something that I'm very interested in myself. So it's great to have Alex on the show, and I'd love to have him back. So the way we get guests to come back on is we usually show them some love, get them some exposure, and that's why they come on the show, right? It's kind of a mutually beneficial. The audience gets something out of the show, and the guest gets some exposure to what they have to say. And I think Alex is very worth a follow. So there you go, guys. We've got just a loaded day of activity today. We will be trading. We will be very, very active. And if you guys are not already inside of our Discord channel, I mentioned this earlier, but let me reiterate. Right now, everything is half off, but if you message us right now on our website, we are going to give you an extra big discount, 55% off any membership. If you're not already in the group, we're going to be very active today trading swing trades, position trades. I got some options trades I want to look at. Frank just put out a trade. You can see his notification just came out. I'm not even sure what he's looking at. Maybe looking at gold or something like that. He's mentioned he's long Swiss yen, which is going well for him. Regardless, come join the action. It's the best possible time to do so. You're getting 55% off, and it's a crazy busy week where we've got lots of stuff. I'm going to continue trading this S&P trade, going to trail stop, see if I can make some money on that one. And you guys in the group, I'll keep you guys updated with what I'm doing inside of the trade alert section. My plan is to trail stops a bit tighter ahead of FOMC stuff, and I will, of course, update there. If you guys are not in the group, again, 55% off if you message us right now. It's 50% off, but if you message us, if you're a live stream viewer and you send a DM right now, you'll get 55% off, more than 0.5% off any of our discounted memberships. Monthly, you can go a monthly membership, try us out. You can go for a year, or you can go the one-time price, which is 55% off. So thank you guys for tuning in today's live stream. Have a great rest of your day, and we will see you back later for the Fed meeting live stream. See you soon. What's up?
Dude, what happened to you?
Haven't you heard? It's the summer half off discount sale.
Oh, that's right. I forgot.
Right now only, get half off any of our VIP Discord memberships. These memberships include access to our signals, where you can get entries and exits from Frank and I, and full breakdown and analysis with each trade. You can learn our strategies in detail. You can learn how to get funded with our training material to help traders looking for funding. And you can also join the chat room community. We have several membership opportunities, so click the link and check them out for yourself. And remember, you get half off if you either message us or use the discount code you see on the screen now.